Hey there, small business owners. Welcome to the Tax Talk Podcast, the premier business podcast aimed at unlocking your unique potential. I'm your host, Jared Pallon, and I help my clients do three things: find common sense business solutions, minimize tax and maximize profits, and preserve your legacy. Each podcast episode will dig deep into an everyday problem that small business owners face, and most importantly, explore solutions to these problems. You ready to solve problems? Are you ready to keep more of your hard-earned wealth? And are you ready to preserve your legacy? Let's get to it. Welcome to the Tax Talk Podcast and the seventh and final episode of Bobcats, Bosses, and Breakups. Before I provide some background on the series, I just wanted to introduce my guest for today. Chrystal Saxby is a personal banking specialist with ATB, focusing on residential mortgages, but also opens accounts and various lending products. You will find that she is genuine and trustworthy and treats her clients like family. She is committed to providing guidance and education as you make your banking decisions, and she will work with you to help you see your dreams become reality. Chrystal, I just want to say thank you for taking some time out of your schedule to hop on the podcast today.
Yes, my pleasure. Thanks for having me.
For sure. So before we get into today's story, just a brief overview on the series again. So going back to 2007, in my early 20s, started a flatwork concrete company. Basically jumped into things, didn't do a whole lot of planning, made a whole lot of mistakes along the way. So the whole series just been focused on bringing in the specialists to look at various areas of small business that you can get a lot of insight, a lot of help from, and just trying to provide some advice to the audience here to help you guys kind of avoid some of these mistakes that I made as a small business owner and some things that I kind of see with my clients today as well. So, hopping into today's background story. So, similar to the real estate and some of the investment ones that we had gone through before, we're going to kind of have to fabricate a bit of a story here. I did not purchase a house while I was operating the concrete company. It was a couple of years after the fact. But it always kind of got me thinking about, you know, when you start out as a small business owner, you've got a lot of cash going into that business. You know, what is the best way to not only sustain that business going forward, but to also, you know, put some money away to save for a mortgage? Is it better to, you know, make sure that business is up and running, fully sustainable before you start saving for your personal goals? Or is it better to just kind of put some small money amounts away, you know, as you're going along to ensure, you know, when you're ready to buy that house that, you know, you've got some funds put away for that. So I figured Chrystal would be perfect to kind of touch on this, give us some insight on, you know, the mortgage experience, how it applies to small business owners, and kind of some tips that we can kind of take into consideration as we plan out our future. So topic number one is just some basic information on mortgages. So I guess when we start out with a mortgage, the first thing that comes to my mind is the application process. So what are some of the things that you need to see in from a client to be able to get that application process started?
Well, we need to see that they have a down payment.
Okay.
We need to see that they're employed, that they're bringing money in. And yeah, how much of a down payment do they have? How long have they been working at their job?
Perfect.
And what kind of house are they looking for? So yeah, there's several different documents that you would need.
Okay.
And it would depend, are you self-employed or are you not self-employed?
Okay. Perfect.
So what I would suggest is the biggest thing is, do you have that down payment?
Okay.
And if you don't have it, how can you get it?
Right.
Right? So like you said, you didn't buy a house, and what should you have done differently? Did you have a down payment? And if not, was your goal to get into a house, and where was that down payment going to come from?
Right.
Because there's different ways to do that. If you've got an RRSP, you could
Right.
take money out of that. You've got, I think it's 15 years before you have to pay that money back to the government. You could get a gift
Right.
from a family member.
For sure.
So, or start making a plan. How much
Right.
can you put aside for that down payment? Because basically, you do only need 5%.
Okay.
Even if you've bought a house before, you can do 5%, but still 5% on a $400,000 house is still $20,000. So where are you going to get that $20,000 from?
For sure.
So I would think that is the biggest thing.
Okay.
You need to be working for a period of time as well.
Okay.
So if I just got a job
Mhm.
2 weeks ago,
Right.
chances are nobody's going to want to lend
Not
me money.
good mortgage material.
No. So the banks or the mortgage lenders like to see 2 years
Okay.
employment history. That being said, if you were in cement or doing whatever, if you move jobs but were in the same line of business
Oh,
for
okay.
2 years, they'll take that into account too.
Interesting.
Yeah.
Perfect. So if someone wanted to start the process with you, what is the best way to do that? Is there kind of an online application to fill out? Should they phone into the branch to make an appointment with you? What's kind of easiest and most efficient?
Yeah, the first thing I would have them do is call me
Okay.
or send me an email so I can call them. But I want to know what's going on, what are your plans, when are you planning on buying this house?
Right.
Do you need the money in a week, or
Right.
is it 3 months down the road? So I want to have an initial discussion.
Okay.
We can do lots over the phone for sure.
Perfect.
We can even DocuSign the documents. So lots of times I never see a client face to face. But I do want to have an initial conversation just to find out their story, what's going on. Is it going to work for them? I don't want to give people false hope.
Good point.
And jump into that application and then knowing that it's not going to work because they've got too much debt.
Okay.
Or, or they don't have that down payment, or they just started their job, or they're not working at all.
Right.
So I don't want them to have false hope. And if it looks like it's not going to work, what can we do to get them there, right? Do they need to get rid of some debt? Do they need a savings plan? We can go through budgeting as well.
Perfect.
We've got all kinds of different things that we can do to get them on the path. They have to want to get there.
Right.
But
it's a two-way street.
Yeah, it's a two-way street. But I'm happy to help give
Right
them
on.
some guidance of how they can get there for sure.
Perfect. So that kind of leads into the next question really well. It seems like I've got no money. How am I supposed to save for a mortgage? And I think that's probably especially true now. I mean, you go to the gas pump or you go to the grocery store, and things that cost X dollars before now cost, significantly more than they used to 6 months ago. So what is the best way for someone to maybe start saving for that mortgage when they feel like they're maybe drowning in just inflation in general?
In life.
Yeah,
Yeah.
exactly.
Yeah, that's a good question. I think the first thing they have to do is make a budget
Okay.
and get a savings plan. So, and I think, people buying houses now, they think, I need to get a starter home is a $400,000 home.
Right.
That's what they think they're on.
Okay.
a starter home isn't a $400,000 home, you know? So just getting them on the path, like, could you buy a $250,000 townhouse to live in while you save for something bigger, right? Because it's a big difference to save $10,000 for down payment as opposed to saving $20,000.
For sure.
So, yeah, you have to look at, just get creative, right? You can start a side hustle, you know, maybe you can sell something on the side, or maybe you're creative, make something. Just make a plan, think about it, and have a goal and work towards that goal. Because, you know, if you don't have a plan, you're not going to get to where you want to go.
Very good point. And I like that idea of the side hustle, because, you know, I think a lot of these expenses are probably out of our control at this point in time, but something that you might have some control in is, you know, finding that little extra income from whatever the source might be to, you know, and maybe you could just turn that side hustle, that's your savings account or something like that. So yeah, being a little bit creative that way might be a good way to jumpstart that savings.
And yeah, saying that, a savings account is a good place to start, right? Because you can get your money working for you.
Right.
Don't just keep it in your checkings account where it's not making any interest.
Makes a very good point. So I think that's kind of it for topic 1. Moving into topic 2 is more directed at the small business owner. So I just want to look at some specific things to keep in mind if, you know, you're going down the mortgage route, you are a small business owner. So the first one is just personal guarantees, and this was something I clearly didn't fully comprehend when I had that concrete company, and I know it impacted a lot of things in my life going forward. So how would a personal guarantee from a business owner, say, you know, he buys a piece of equipment, he's going to guarantee that loan in the business, does that have any impact then on that individual getting a mortgage?
Yes, it does.
Okay.
Because you've personally tied yourself to that business expense.
Right.
So when you get a mortgage, you need, it's debt serviced.
Okay.
So that debt is going to go on your personal side.
Gotcha.
So it's going to reflect if you're going to be able to afford a house or not.
Okay.
And personally, I would get a business loan and not a personal guarantee, because one, you know, if your business fails, you don't want them coming to take your house or your car or whatever. Keep the two separate, right? So it can go either way, right? If you lose your house, is it going to affect your business? If you lose your business, is it going to affect your personal life? So, yeah. So yes, a personal guarantee is going to affect whether you can get a mortgage or not, for sure.
Okay, perfect. So if I'm in business, is there a certain kind of period of time that I need to be operating? You kind of mentioned, you know, 2 years of work history. Is it similar for a small business owner? Or?
So for a small business, they really won't look at anything under 2 years.
Oh, okay.
So they want you to be in business 2 years to see that your business is being successful, that it's making money.
Okay.
Yeah, so I wouldn't even recommend really even trying if you've been in business less than 2 years. Maybe if you have a huge down payment, they'd look at that. Everybody has a story, and we're willing to hear everybody's story. So, but also again, back to that, I wouldn't want to give you false hope. Right.
That's fair. That's fair.
So yeah, if you've been super successful in that first year, we would look at working with you. But typically that's not
the dead end zone. Eh?
That's not where they like to go. There's like guidelines, and I will say, coming from the mortgage broker channel to the bank, I feel like the bank is a little more willing to find a way for it to work than the broker channel is, because the broker channel seems to be like this.
Right.
We do have that at the bank as well, but we are a little more open, especially at ATB, not to like give a plug, but ATB loves small businesses.
Okay.
So
good to know. Good to know.
So that is something that, you know, to consider.
Okay.
ATB does, it's an Alberta company, it loves Alberta small businesses.
Okay.
For sure.
So what it, I guess, makes sense then, say an individual is currently employed wherever, maybe considering starting a small business, leaving the employment side behind, but also in the process of seeking out a mortgage. Would it make sense then probably to secure that mortgage, get that all fixed up, and then leave the employment and move into small business ownership? Would that kind of make more sense?
That's what I would recommend doing if you're, you know, if you're going to qualify for a mortgage, if you've got that down payment, get that all in place before you move on. I would totally recommend doing that if that's what you're able to do.
Okay.
Yeah.
Perfect. And then I guess the other thing, and this hasn't come up, I guess, for my clients as much in the past number of years, but I know it used to be a fairly big issue, and we had to do a bunch of tax planning to kind of skirt some of this every once in a while. And it was the fact that it seemed like banks favored wages in a more favorable light than they did dividends. And that kind of posed a bit of a problem for, you know, certain tax planning things that we had in place. And sometimes we'd have to move clients off of the dividends for a couple of years to kind of start showing that wages, you know, track record. Lately, it hasn't seemed to be as big of a deal. Is that kind of a thing that you've maybe noticed, or?
I do notice that.
Okay.
I think you're exactly right.
Okay.
I think they do prefer wages over dividends.
Gotcha.
Because they want to see that you're personally bringing money in, right?
Gotcha.
So yeah, I know businesses like to write off stuff, and it makes it hard, because it looks like, okay, well, you did have a good income, but how much of that went into your pocket?
Right.
Or did it go to the expenses of your business?
Right.
And that being said too, they again have to look at the financial statements.
Right. That's fine.
So you've done your job, we can see what's coming in, what's going out. So they're definitely looking at what's happened at the end of the day, right? So is that company viable and making money? So yeah, I think, again, it's that whole story. We want to see the whole story of what's happening, because if there's a lot of expenses and it's a business that maybe is doing, maybe it's seasonal.
Right.
Maybe it's susceptible to crashes, like what the economy's doing.
Right.
So again, it's that whole story.
Gotcha.
What's your story? How can we? Yeah, we just love to see the whole picture.
Good.
So, how do we help you get there? And again, like, that's why it takes, you don't just get a mortgage just by going to the bank.
Right.
You've been to your bookkeeper, you've been to your accountant, you've talked to real estate, so it's that, have you got all your ducks in a row?
Right. For sure.
I guess is the way to put that.
Definitely.
Yeah. So.
Yeah, I think that's good. I mean, that you guys are able to look at that whole picture and, say, okay, well, yeah, there's no wages here on a personal tax return, but, you know, if we look at the corporate financials,
Yeah.
you know, everything's strong. There is, you know, money hitting that bottom line, and he's just taking it out through dividends as opposed to a wage. And, you know, for a lot of small business owners, it's just easier to deal with the dividends. They don't have to put in the payroll remittances on a regular basis,
Right.
and it just works better for a lot of small business owners.
Yeah.
So I'm happy to hear that, you know, it's a big picture kind of thing, and it's not just, let's look at the first 8 pages of the personal return and say, oh, there's no wages, so
Yeah.
we're done, and I'm sorry.
Yeah. Yeah, no, and we always, you know, get the notice of assessments and
Perfect.
look at everything. So yeah, as a business owner, we're gonna look at those financials, but we're also gonna see your notice of assessments as well.
Right on.
So yeah,
That's good.
yeah, I think, you know, there's always, purchasing a house is a big deal.
Yep.
So,
it is.
That it is. And I think if that's what you want to do, I think there's always a way to get there.
For sure.
It might take longer than 2 months.
Right.
It might take longer than a year.
For
But
sure.
I think we're fortunate to live where we do.
Yep.
Because
that's
houses, you know, if you lived in Toronto or Vancouver, 20-year-olds aren't buying houses there.
For sure.
They're hoping that they get one left to them.
Yeah.
Honestly.
Yeah, and I mean, that's a bit of a, you know, a sad state that, you know, you can put in a bunch of time into, you know, either going to school or a trade or whatever the case is, and you can get yourself a good paying job, and, you know, in some of those markets, it's just unattainable.
Yeah.
You know, at least here in Alberta, yeah, I mean, some things are probably still overpriced for sure, but there are options to get you into that market.
Mm-hmm.
And I mean, I guess the way I've always looked at it is, I mean, yeah, even as interest rate goes up, yeah, you're paying X percent per month, but that's a better percent than paying 100% to rent.
Exactly.
You know, at the end of the day, you're going to eventually own this thing, whereas X amount of years you spend paying for someone else's mortgage. So
Yeah.
to me, it's always kind of made sense to secure that asset. They always, you know, seem to hold value over the long term, and it just seems to be a good way to go. There's obviously added headaches with having to deal with the maintenance and all the other things,
Yeah.
but I think you just kind of take those in stride and kind of make a decision that works best for you and your family. So I guess in closing, are there any tips that you have for small business owners?
For small business owners, I would say, well, kind of like what you said, if you are thinking of going that way, get
Right.
into your house first,
Gotcha.
but also get a good accountant. Seriously though,
Yeah.
like seriously, because you want those financials to reflect that you
Yeah.
can afford to get into a house. So I would say that's my biggest tip is you don't want to be having so many write-offs that it looks like you didn't make any money,
Right.
because that's going to be difficult for you to get into
For sure.
a house. So
Yeah, and I know that's something we kind of come across every once in a while is, you know, you need to ensure that that individual's got some money there reflected as a, you know, an ability to support this mortgage going
Yeah.
forward. So
Yeah,
I think a lot of
exactly.
people get in this mindset, you know, deductions, less tax, but, you know, it can be a bit of a catch-22 and kind of hurt you on that mortgage side of things. So
definitely.
yeah, no, that makes sense.
Yeah.
Perfect. Well, Chrystal, I just wanted to say thank you very much for taking the time out of your very busy schedule. I know it's taken a little bit for us to kind of get this scheduled out, so I want to thank you for stopping by. If people do want to get a hold of you, touch base with you at ATB for the line of products that you offer, what is the best way to get a hold of you?
The best way to get a hold of me right now is just to send me an email, and it's csaxby@atb.com. So, and yeah, just reach out. If you know me personally, then you can call my cell. But other
I will put the email in the show notes. The cell phone will be excluded for friends and family only. Perfect. So, for the Tax Talk podcast, I'm Jared Pilon. Thank you very much for listening. Take care, and we will talk soon.
Thank you.
That's it. That's all.
Nice.
Not too stressful.
That wasn't
or what?
too bad.
No.